that? Sorry. Hey everybody, 1 second. A little bit of a drama here with my computer. How's everybody doing out there? So I didn't get a weekly update out, and I had this request come in on Twitter to go live. So I said, oh, I guess instead of go live YouTube. Okay. Instead of going doing my weekly update video for last week, we're just going to turn this into an impromptu live session, and maybe I'll cut this out into an update. But as usual, welcome everybody. Good afternoon. I guess this is afternoon now, huh? So as usual, not financial advice. If you end up taking anything that you hear here without doing your own research, you're going to end up losing all your money and living in a van by the river with Boneholder and Doge here. So, getting to the news. I don't have it pulled up here, but the ETF, VanEck ETF, I believe, was denied. So we had this big move up, and we found out Friday, which was the 12th. Is it over here somewhere? I guess the reports that it was being denied must have come in on the 11th. Bitcoin turned around and started to sell off right as those reports were coming in that it was going to be denied, I guess. I don't really know exactly how that worked out. But yeah, so that was the big news. The spot ETF was rejected, which is a good thing. We want spot ETFs. We don't want futures ETFs. Futures ETFs are going to end up being a drain. They end up being a drain on the underlying asset because the way the futures market works, there's a lot of fees involved in it. And so those fees end up going into sell-side pressure for the underlying asset ultimately, actually. So it's not the most positive thing in the world that they we got that rejection there. CTT in the house. Yeah, I guess. If you guys don't know, I started a new CTT Discord server. See my pinned tweet on my Twitter profile. Somebody told me they were having issues with it, so there's 2 links. Let me know if you guys have any issues with that. Why is my music not playing? Y'all have audio back there? Okay, good. Everything's good. I hear something. All right. And then now, I think the business of the day is I should probably start with. I put this tweet out. This is the one that I don't know how to pronounce your name. I have no idea. Whatever. So hey, go live on this tweet. I don't know why this tweet he responded to. I got a guy, Tweezy, saying, who even is this guy? Alright, so basically, obviously, if we line up the July low, this is the 2017 fractal properly scaled. So I measured from the July low of 2017 to the July peak, the percentage gain. And I gave it the same percentage gain, the same number of days, and the same percentage gain. So this is properly scaled to both the time duration and the percentage gain that Bitcoin saw in 2017. And here's our real-time price action unfolding for this year. So we are currently, by the end of this week, we need to be, in order to keep pace with this, like if we get a 30% sell-off like this had here, right? It's a 40% sell-off actually. And in order to keep pace with this, we need to be $126,000 at closing this week. And then we can have our sell-off back down to the 90s and then resume, right? That's if we were going to keep pace. Obviously, currently, we're not keeping pace very well. What's good? And Tran says, what's good? I don't know if I want to. Yeah, the Discord people can catch up later. All right, and then let's look at some of the tweets here. So I put this out. All right, I'm not a Wyckoff expert. I do not trade Wyckoff for like the millionth time. Now, what's going to happen, I'm just going to be more forthright here, a little more freedom to speak. What's going to happen is somebody's going to take my statements here, and they're going to say, oh, Brandon sold his Bitcoin and the buyback high or something. Somebody's going to claim that I'm bearish and I sold all my Bitcoin because I put this chart out. That's not the case. I am holding full. I still have all my base account is in Bitcoin. I have a very simple parachute strategy to get out whenever it's time to get out of tradable Bitcoin and park that in stable coins collecting interest until it's time to get back in, right? That's not this time. Everything is good right now. However, I did put this out there that what I was reviewing some information and following some guys who do Wyckoff on Twitter and actually chatting with them, I was told that yes, you're actually right about the September. If you remember this tweet way back here, I don't know if I didn't quote it. I tweeted way back in September. We might be in that accumulation, whatever else. And so I was looking for an accumulation pattern 1, which is the same pattern we had before, which is a spring low, a lower spring low than the price action. But what we ended up getting is a couple of bounces, and we ended up then taking off. So if we go look up, I'll pull it up here, Wyckoff Accumulation. Let's pull up Wyckoff Accumulation 2 is ultimately what we had. All right, so September ended up being this pattern right here. You see this chart I've got pulled up here. Let's see if I can make this a new tab here. Now it's just gonna, hold on, open image, a new tab. All right, this was the pattern we ended up getting in September. So that $40,000 test, they actually tested the 120-day moving average, which is what I lined up for a really long time. I even put a tweet out, said, I put it out over here, right? I put out a tweet somewhere over here saying the next time we get a touch of the 120-day SMA, it's going to be the best opportunity in the bull market cycle for the remainder of the bull market cycle, right? So I had planned to, against my rules, take on some leverage, which I did, but then we had all the Hong Kong news and everything else. And I was looking at the time, you can see here, this is the Wyckoff accumulation we had over summer. So this is what I had fresh in my mind, which is Wyckoff. I actually we were using this gibberish, I don't want to say whatever the name is here. This pattern here is actually what we got, right? And this is Wyckoff accumulation pattern 1. There's a selling climax, some secondary tests, and then a spring shakeout that's lower. Well, this is what we were looking for, and this is where I was thinking, okay, this Hong Kong tether FUD might be what causes us to put in this lower spring shakeout, 36, 38,000, somewhere in that range. However, what ended up actually happening was we put in a Wyckoff 2. So we had some downside, a bounce, and then we put in a low at 40,000, and then we ended up doing this kind of just pattern, and then out we took off pretty fast out of there. So, and then this is right here. You see this price action right here? Look at the phase D. I'm going to show you the actual chart from September. So what we did was this. We sold off, initial sell-off, then a bounce, and then some sputtering around above. This is the SC right here. We sputtered around above it, then we came up and put in this pattern, okay? So let's go back to you see this is the Wyckoff accumulation. So you see there's the SC. Actually, I guess this would be the SC. And then this is the spring down here. Yep. So that was ST in phase B, which is kind of like the spring. So this is ST, and correct that. So what actually happened here was that was the SC. This was the ST in phase B. And then we got the resumption out. And then we got so this was, ping-ponged around. So you see these tests, 1, 2, 3, 4 tests. Take a look at this. 1, 2, 3, 4 tests of right above that level. If I go to a lower time frame, you'll see it better. Right. So we put in multiple, boom, 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 4 tests. 1, 2, 3, 4. Go over here. 1, 2, 3, 4. And then we took off a little bit of a move, and then we took off big and consolidated here in the high 40s, which is your SOS, and then off we took off, right? So this was Wyckoff accumulation schematic 2. Now in the summer, it looked a little different. They're running the same playbook almost, but they're flipping plays on us. They're going from accumulation 1 to accumulation 2. In the summer, it was a selling climax, a bunch of secondary tests, a secondary test that people thought was a spring, and this is typical of Wyckoff accumulation 1. A secondary test a lot of people think is a spring, back up to the creek or trap level, whatever they call it, and then one more spring. That's Wyckoff accumulation 1. That's what we got. This was our spring over here. All right, and then the typical up a little bit, and then this was your SOS pattern, and then off we went, okay? So we had, and this was Wyckoff distribution 1. So Wyckoff distribution 1 ends in a third drive higher. So basically the main thing is it's 3 drives and then a lower high and then it rolls over, right? That's kind of the thing of the Wyckoff accumulation there. Okay, yeah, distribution there. So we've gone from Wyckoff distribution 1, accumulation 1, into a Wyckoff accumulation 2, and this actually is like a stunted look at these 3 drives here. This is kind of a mini 3 drives pattern over here. Big sell-off into a quick accumulation. It was a quick accumulation, but it was a Wyckoff accumulation schematic 2. And now we're over here, and a lot of people are watching for the Wyckoff patterns, which I am not a Wyckoff expert. I do not claim to be. I'm just super fascinated in watching this all play out. Like, I can't, it's like watching a train wreck. I can't take my eyes off of it, right? It's just super duper fascinating. All right, so we overlay this, and it's like stupid, crazy, uncanny, right? Like, we got this double bounce over here that matches up perfectly. Like, it is insanely uncanny, the price action from the spring to right now, and just a little bit higher on the price. But I mean, this is just stupid. Look at it. I didn't do anything. I didn't resize it. I literally just drug it over and plopped it right there. I didn't touch a dang thing. Not a thing. All right, so what you've got here is the hallmark of this kind of the end of this accumulation, your SOS, and then boom, your distribution starts over here above this area, right? So we had the first drive higher, then a new all-time high printed barely, and then a big sell-off, some harvesting, and then a new drive higher, barely new drive higher, and a sell-off. You see this from last time. What's stupid about this is the second drive sell off, a little bit of a bounce, and then the bigger leg down, right? We got the same exact thing happening now. But a lot of people are looking at this going, okay, well, maybe we'll bottom out and put in a third high. However, what faked me out, this is why I don't try to overly trade this. I will never overly trade this at this point. Maybe someday I'll take the time to study and actually become a Wyckoff expert. I am not. There's a lot of nuance to it that I don't understand, so I'm not even going to attempt to try to trade on this. This is not tradable insight, in my opinion. Again, I am just super fascinated in watching these patterns play out, and I'm observing and studying this for now is all I'm doing. And I have my own strategy about managing around this. Okay, there's my ultimate parachute level right there, right? But we're going to be using this parachute level, the 50-day at 58K, a little bit better insight in back testing this. But nonetheless, a lot of people are expecting us to put in maybe a bounce and then a third top at least. But again, we got Wyckoff schematic B or 2 in September, so we could be in distribution schematic B. What's the hallmark of that? You have a drive higher, so we put in that first all-time high, and then a sell-off. Let's go look at our chart. Let's make this bigger. All right. Drive higher, and then a sell-off. Looks pretty close. You had a big bounce right here. So if we let's get rid of this. Well, yeah, you see the hallmark, right? Sell off, automatic rejection, and a lower low, right? So we go over here, more or less the same thing, right? And then a slightly higher high, but very slightly higher, right? Very slightly higher high, and then a sell off. Now we might have had the local top. Now, I'm not saying the top in Bitcoin for forever. I'm not even saying the cycle. I'm just saying the local top. We might have, I'm starting to lean towards three distributions overall by the time we're said and done, right? This is the second one, and this is going to fake out a lot of people if this plays out. But the other thing, too, is I posted on that thread. Where'd it go? Over here somewhere it is. I posted this. I said, okay, so I took that same line, ridiculous, just lines up way too close. But I said, I did accentuate it a little bit just so people could see this a little easier. But distribution schematic number 2 would skip this third higher high. So a lot of people are going to be looking for this third drive higher because that's what we had in the springtime. But we might not get that if we're in distribution schematic 2. Nonetheless, it's all interesting to watch for. Now, going back to, I'm not a Wyckoff expert, so how am I going to manage if this is unfolding? What am I going to do, right? What am I going to do? What I'm going to do is I'm going to do like I always do. Nothing changes for me. You see this 50-day SMA? Okay, I do. I'm sorry, I take that back. My parachute level for leverage was the 50-day, and my parachute, I guess right there, and my parachute level for tradable spot was over here at the 120-day. I have now added the 20-day, and I'm moving all that up because what I caught last time was more or less when we lost this 20. And this 20 lost fast over here in the third one. But the 20 days was giving me the indicator that I need to chill on leverage. I'm already out of leverage, actually. At this, like, what gave me the indicator before was this 3-drive pattern. I said if we didn't just take off and we came back in, I was getting myself stopped out. So I put a stop right at the prior all-time high. And when we hit it, I was out right before, but right around 67,000. So I've been out of leverage since then, and I've just been watching. So that was my clue over here. But ultimately, I'm going to use the 50-day SMA as an area to start trimming some tradable spot to buy lower if we should enter an accumulation pattern. That's my plan right now, not financial advice. Listen to this at your own peril. But that's one of the hallmarks of this whole thing was the 50-day was a really good area to look for because when you lost it, you bounced back up into it. Ultimately, some false breakups above it, found it as resistance, and then took off to the downside. So this is going to be my indicator that we have entered some sort of the ending phase of a distribution pattern. Should we get this same kind of action here, the 50-day moving over, and we get below it, and that's okay, this is time to trim some tradable spot maybe and be prepared for an accumulation. My guess is also, this is a total guess, I'm not an expert at this Wyckoff stuff. My guess is that maybe because, and I need to ask some people who are experts, maybe because this ultimately this measured move from the basing down here up to this distribution over here isn't nearly as big as it was 2020 through the pattern. My guess is the downside will also be limited, and I'm kind of thinking somewhere in the 40s would be the ultimate accumulation spot. But I haven't got that far right now. One step at a time. I'm just seeing this pattern unfold, and I'm wondering if we're maybe just not going to print this pattern here, then get some accumulation of some type. Think about that. That would be max pain for the market, right? That would be we have so many people who are so convinced that we're going to several $100,000 by the end of the year because that's what happened in 2013, that's what happened in 2017, so it has to happen in 2021, right? I actually just found out, I didn't know this, somebody in the CTT Discord was posting a bunch of the CTT is crypto trades and tech, by the way. Somebody in the CTT Discord was posting a bunch of posts, from kind of different influencers on crypto Twitter, buying, one buying a Koenigsegg, one buying a Lamborghini, one buying like a nice Mustang, and one buying an Audi, and people buying big ticket items. I'm starting to get the real sense that the reason so many people are fighting us so hard on this theory that maybe we push the top, the conclusion of the market's actually in early 2021, more in line with Michael from Fair Free Digital's block-based work, and we actually just get some kind of very boring price action and really just put the screws to the people who are expecting the Moon Boys stuff at the end of the year. I called end of the year Moon Boys, but there are a lot of people that have bought big ticket items apparently expecting a big blow off top at the end of the year, right? So they've kind of counted their chickens before they hatch. If that's not a sure sign of a lot of potential downside, I don't know what is, but honestly don't know too many people, I don't know anybody personally, but I've heard enough stories about it now that there are literally people have been buying big ticket items again with the expectation of this big blow off top, and I'm getting the sense of that. I'm getting the sense that there's a people that have a lot of anxiety because they've already maybe quit their job or they bought some big ticket item expecting to be able to pay it off or pay it down when there's a blow off top in Bitcoin, and that's why they're fighting this so hard. But I don't know. We keep going back to on-chain data. I want to share this one little piece of information. On-chain data right now, it's fairly strong, but it's gotten more neutral the last couple of weeks. The biggest red flag is there's definitely a lot more activity of whales, and whales have been moving coins to exchange. There's been a sneaky, transfer to exchange the past week, and there's a lot of large wallets selling right now. Large wallets are selling very much like what we saw over here. So we'll keep a close eye on that. The other big thing is volume has been extremely low. The volume profiles have been just really, really weak. I think I posted in another tweet this morning sometime. Let me show you my volume here. Let's see here. And the volume has picked up. Good news, volume picked up on the selling. It's not good. That part's not good. So the selling has been where the volumes are coming in at. I don't know where I posted the volume thing at. Whatever. Oh, here it is right here. Boom. Found it. Sorry. On the flip side, volume is suspiciously low. Further comment, I'd like to see a little more volume coming in if we get a resumption. Right, so this is the last 30 days that I posted by hour. So you can see we've had a few volume spikes. Now in the last 45 days, I went back and counted from basically, and maybe more like the last 30 days, but I think it was the last 45 days. The majority of the high volume spikes were actually selling. So I believe in the last 45 days, the biggest volume spikes were on October 21st and October 26th and November 10th. Let's go look at this chart and see if that lines up. October, see these big spikes right here in October, late October? Those big spikes were selling spikes. And then November, this is a big spike of activity. And this morning we've had volume has been picking up on this sell-off. All this was higher volume than this. So this had more volume than this. A big, not good indicator, right? The equivalent move up was lower volume than the move down so far. Now we'll keep analyzing that, right? But there's more data. We keep pouring over more and more data. There is some evidence to suggest. I'm gonna say this, and it's gonna be kind of disheartening to a lot of people, and I'm trying to get to the bottom of it myself. There is evidence to suggest that the on-chain data that we're using at a Glassnode specifically is not accurate. It's very inaccurate. Binance has even come out and said, hey, your data is not accurate about us. So what that tells me is that ultimately you see this illiquid supply shock, all these other things, they're all derivatives of this core data right here. This data right here, the balance on exchange, and then some different wallet size balances, is where they generate all that data about illiquid supply and everything else. So fundamentally, this data right here, this net transfers to and from, and this data right here is where you get. This is the majority of the source of that, all those illiquid supply shock ratios and everything else. Binance has said that the data feed specifically for Binance is not right. They came out and said your data is way off. So we don't know. I don't know if that means that the data is if they're showing more coins than they really have, or most likely they're not showing enough coins. So the other thing to keep in mind is that we've had a drawdown from 3 million coins on exchange down to 2.4 million coins on exchange. So stop and think about that. There's still 2.4 million Bitcoin on exchanges that all the account owner has to do is log in and hit market sell or limit whatever, right? 2.5 million Bitcoin is more than enough to cause a lot of short-term pain, right? So just keep that in mind. This is a very macro trend. This is a long-term, okay. What we see here evidence of when coins are coming off of exchange is a combination of two things. One, there's more convicted buyers, right? So they're willing to take their coins off of exchange and hold them in an offline wallet, and it takes them all of 30 minutes to get the coins back on exchange, right? If they want to sell something. So, it's not like this is a permanent thing. This is a 30-minute thing, right? So instead of being able to sell immediately, they can sell in 30 minutes, right? They have to transfer back to exchange and sell. So this can change. Look at this big spike right here. This can change fast. People can put coins back on exchange. Literally, it takes, within the time frame of an hour, we could have a huge influx of coins on exchange for whatever reason. That's just the way it works. So this is bullish though, because again, it shows more conviction. These people are willing to take and self-custody it. But the other thing that I'm worried that this data is largely skewed, because there's so much more information about self-custody now than in the past, that it's just really easy to self-custody your coins. Whereas before, people didn't trust it, didn't know how to do it, didn't want to mess with it. They just wanted to keep their coins on the exchange, and it was easier that way. But now there's so much education on self-custody, and I think a good chunk of this decline in coins on exchange that we see is simply the information about self-custody on the other end, maybe not with Bitcoin specifically, but obviously Ethereum-based products, there are decentralized exchanges where you can hold your coins off of exchange. You see this massive outflow of Ethereum off of quote-unquote exchanges, but those those coins coming off exchange could be in a MetaMask wallet that's connected to Loopring or Uniswap and can be sold at a moment's notice as well, right? So the decentralized exchanges and the information about self-custody is probably skewing the what we perceive as the impact of this, right? And again, there's still 2.4 million coins on exchange. So don't think when you see this type of data that this means that in the next week, price has to go up because some coins came off of exchange. There's still 2.45 million coins on exchange. All right. And Michael's on here. He says he's been looking at 3 waves. I mean, review Michael's work. Michael and I did a video. It's one of the more, I haven't been able to keep up with my videos lately. I mean, all I can do is occasionally just do a quick live stream. But there's a video here. Let me go find it. If I go to my channel, and this is like, I'll put it in the chat. Hold on, let me find it. 2 seconds, guys. I'm gonna go to my YouTube studio over here. It's like one of the top ones, most recent ones anyway. And then I'm gonna copy this right now. If you haven't watched Michael and I's, this is the chat's over here, video on the block-based cycle and that data, it's some really good information for you to review. 3 waves, kind of 3 major waves, this being the first, this being the second that we're in right now, and then a third, coming early next year is, I think, what he and I are both kind of seeing. Now, I'm seeing it for different reasons, but I've been a big proponent of measuring cycles by blocks, of course, but I've never had the time to do the work that Michael has put in to do the actual measuring of it, and so his data is invaluable to all of us, so really great. Cannonball. Michael, did you jump in the water and muddy it all up again? Scary how identical this looks. Yeah. Give me 72, says Truth Capital. You ain't getting it, Gus. I think we're at 2. I think that was the peak at 16. That's my guess. This is my guess. Y'all don't overreact to it. You make your own dang decisions. Do your own research. I think this ain't going to happen. That's what I think. But I don't know. I could be wrong. And if this does happen, there's also a decent chance it actually just overshoots this a lot and hits close to miles 84. And then guess what? Everybody who's looking at Wyckoff is then also wrong. Another small thing. Here's another thing I'm looking for. And the timing of this, Miles says by the end of this month, which is typically November has a sell-off into the late part of the month, right? It's kind of typical. So you can kind of see it lining up here for this late November sell-off. But nonetheless, what Miles is shooting for is an 84K price target, and then a quick correction, and then a bounce. Okay? So the other thing that I'm looking for is if we do get that high, I think this would also invalidate most of this. This is way overshooting any sort of Wyckoff schematic target potentially. And then if we get a bounce, especially off this and resumption, then we know this Wyckoff, I think just hitting the 84K, I'll be very suspect that the Wyckoff model is probably invalidated. And especially if we get a bounce off of the all-time high and resume, then we'll know it's definitely invalidated. If we take out 84K after hitting it, like if we do this, come back down, this whole thing is completely invalidated. So it's really good insights because if we do hit his 84K target, most likely then we're going to follow through and come right back down to 69,000, which is our opportunity to load up, right, or 70,000. For the bounce, and we'll know quickly we're wrong, right? So you load up over here and you put some stops, 66 whatever K, and if you don't get an immediate bounce, then something's off. But just not financial advice, just some insights here. So if we do get that blow off top, I'm looking for that 84K bounce, come back, never drop significantly below these 2 lows back right here. It shouldn't drop below. Really, I guess let me clarify. Yeah, 67K shouldn't drop below 67K. So buy coming into this area of support and be ready to dump if we were to roll over further, right? That type of thing. But if we hit this 84K target, that'll be really good insight that we've invalidated this. This was just a fake out kind of, just a double wave and then a third and off we go. But I don't know. We'll see about that. Not looking likely, obviously, but I'm not going to rule anything out at this point. I'm just trying to observe and learn and adjust as much as we can in real time here. Okay. All right. So wrong reaction. Give me 72. To me, this looks most likely as the Moon Boys are back to 100K land. BTC will probably do what we don't expect. Brent, how do we reconcile either 3-drive or 2-drive Wyckoff with on-chain data suggesting that whales have begun selling? Andy, I'm not 100% sure what you're talking about here, but 3-drive or 2-drive Wyckoff. Oh, which one? How do we know which pattern we're in? We won't know, I don't think, for a certainty until we make this next impulse up, and if we roll over here, right, and start the downside. So let's look closely at the pattern here, right? I don't know. I'm going to rely on my own trading insights. I'm not going to worry about the exact of this too much. I mean, ultimately, if we don't take out the last high, it's kind of a key indicator we're in too, but that's not too terribly impactful insight. Let's see if there's anything else. Yeah, so we shouldn't ever get back above really even 66.9 at this point. So if we get back above 67,000, then maybe either we're in Wyckoff schematic 1 and we make this 70 something K, and 74K or so and roll over, 72, 74K and roll over, or if we get back above what's that level right there? 67. Then that's just an indicator that maybe the Wyckoff thing isn't playing out too. Maybe our first kind of early indicator, but obviously we have to be very prepared for this, eventuality. And then what we'll really know ultimately is this lower high. So I guess in theory, if you kind of look at this, last time we had this third peak and then a lower high and it rolled over. Right here, we saw a massive, as price was coming up here, we saw a massive increase of coins on exchange. Let me show you that on this. All right, let's zoom in. Let's get to that point. Let's show you this. All right, so just notice very carefully where I'm going to put my mouse. All right, so we had this high right here. We were all saying a lot of us got duped. Right here, I was really certain we were headed for a big breakout. Right, I was like, okay, it looks like Bitcoin's going to go. What I kept saying right here, and this is where I have my mouse, April 11th. I was like, all right, when we broke that other all-time high from back in March, what I said is, okay, it appears like, and we were all looking for a big sell-off, and I was looking for the summer doldrums the whole time. I was looking for a really boring summer. I said it appears like Bitcoin's going to break out and head, to the 80s and some other resistance in that area before we get the next 30% sell-off and a prolonged summer doldrums, right? I gave us a very muted Wyckoff at the time. I wasn't paying as much attention as I should. 64K top and then roll over. But now, look what happened as we sold off. Okay, you know what? A little bit of, right here, not too concerning. All right, yeah, just we have a third one of these. We're starting to lose momentum, so it was concerning. But this is where we hit that 50-day right here, that little wiggle, 50-day. And then once we lost the 50-day, we saw a lot of coins come on exchange. Not that big of a deal. Some selling pressure, a few coins came on exchange. But this right here, you see my mouse? You see price bounced, and you see the coins right there. From April 24th, there was at the bottom here's a lot of coins on exchange, and then price started to recover and coins kept coming onto exchange. So we had a net increase of coins on exchange from the first peak here on April 27th. I had to really zoom in on this, guys, to help you get this a little bit clearer. I mean, I've studied the heck out of this, so I like have it in my head, but I'll make sure everybody else understands what I'm saying here. Hold on. Let me zoom in just a little bit more. Oh, I can do it like that. Hold on. I'm sorry, guys. 1 second. I'm going to try to get this really crystal clear for everybody. All right, we're going to really zoom into this whole time frame right here. Okay. So, you saw as price was coming right here, this is that lower high that we put in. We put in a lower high. At the same time, coins were coming on exchange. This right here was a huge red flag as we started to kind of roll. On this lower high, we had a bunch of coins coming onto exchange. And then the collapse happened and coins very precipitously came on exchange to be sold. And then we kind of flatlined. Okay, but this was my big indicator. This is my on-chain indicator, if you will. We are on a technical analysis, a TA analysis. We're putting in a lower high. You can see it kind of forming, starting to roll over here. At the same time, coins are increasing on exchange. That is a surefire sign to me that we're in trouble. So back to this pattern. Same exact thing here, I would say. If we get kind of this kind of little bit of a V over here and then a bounce, and we start to chop around and don't ever break 67,000, but we're chopping, say, this is accumulation, we're chopping just below 67,000, If we start to see coins coming on exchange through here, then we're going to know we're headed for some serious pain. And this is a good opportunity to maybe do whatever defensive posture you think is appropriate. So I'll make it very clear. I'm not bearish on Bitcoin. At this stage, I go from very bullish and very aggressive on trades to bullish and defensive on trades. That is literally how I've been waffling since you've all known me. I've been very bullish on Bitcoin long term, but I have waffled from flip-flopped, if you want to call it. I've waffled from very aggressive, looking for long entries into defensive posture, right? All right. And I get more defensive the more things break down. The most defensive posture I get is not to sell my HODL bag, my long-term HODL bag. It is to sell my tradable spot, park it in stable coins and collect interest and or make other trades with it until the technicals improve and I put my money back into spot Bitcoin, right? That's my most defensive play during the bull market. I always maintain a long-term bag in the bull market. I will only sell my long-term bag when it's clear and obvious that we have hit some sort of very large parabolic move and that I know for a fact that I'm going to be able to buy my Bitcoin back at a fraction of what I'm selling them at. That's when I sell the HODL bag, right? But otherwise, this is all just measures of defense. Right now, the measure of defense I'm in is I'm simply just not taking leveraged longs because the setup just really isn't there. We were working on a setup here this morning. I posted a tweet about it, but obviously that 12-hour signal never triggered, and it kept me safe. So we had this little bit of a breakup of this little bit of a pattern here, got back above a key support level. Let me show you that tweet. And guess what? My 12-hour, my bias for 12-hour candles served me well. So I never got a false signal right here. I posted this tweet this morning. Great morning. So we flipped on that daily and weekly close. We flipped this all-time high from resistance to support. It's very simple, right? That's a very significant number, that all-time high back here in April. We flipped it back from resistance because we had closed below it a couple days to support, closing weekly back above it and the dailies back above it. So it flipped back to support. And if we got, this is a 12-hour chart, if we got a 12-hour candle that hit that and then bounced, and we take out this 12-hour test candle, then that would have been an entry signal for me and I would have put a trade on. But we did not get that so far. And at this point, it's not the end. We didn't take out the 20 days, so I would still maintain that bullish bias. If we did trigger it here, I'll have to look at some factors. I'm not going to get into that right now. We're not going to worry about that right now. But the main thing is my defensive posture is I'm currently just simply not in leverage. I closed leverage when we lost this high right here because I don't like this pattern that we've been in of a false breakout, a sell-off, false breakout, and sell-off. So basically any all-time high breakout, I'm always immediately going to put my stop loss basically right under the prior all-time high. So what I did here was I think I closed out a little bit, yeah. So on this breakout, my stop loss would be 64,945, this over here, right, this breakout. On this breakout, it's going to be this, so forth and so on, right? So I'll go 2 back, and that would be my ultimate stop loss. I don't know, I'm kind of rambling now. Let me look at comments. Went off the reservation here. Tesla had a blow off top and BTC has been following on the overlay. We might get it, but no 6 digits. Okay. Hey, Brandon, if this plays out, does that mean alt season will start? Because that's what happened last time. Hassan, great question. And it probably, but here's my problem with that. We're off script, guys. We're just way off script in a lot of ways currently. We're kind of at some support on Bitcoin dominance right now, and it never bounced. Now, that was my target this whole time. Obviously, we never got anywhere near my target. So I was looking for a large impulse to the upside and hit that target on Bitcoin dominance before Altseason 2. The kind of issue is if Bitcoin starts to roll over here, I think Bitcoin dominance is going to bounce for the wrong reasons at this juncture. I think we had kind of our alt season and then maybe our alt season 2. You see this kind of general W pattern? And I don't really know, honestly. We're just off script. Just to be honest with you. This bounced, this was after Bitcoin sold off. So this was Bitcoin dominance rose as things sold off in 2018, right? This was the sell-off in 2018, and alts just bled harder. So the truth is, we might make it back to my target on the back of a big market-wide sell-off, and the alts just bleed harder. and everybody's expecting maybe altcoins to go parabolic here, and they're looking at the wrong time frame, looking at the wrong part of the cycle for that to happen. Because the reason I say that too is just look at some of the market cap of some of these projects. It's gone up kind of precipitously, but let me look at the total. The total market cap on altcoins, I don't have a good answer for you. I need to do some thinking on that, because another kind of small piece of data is in roughly over a year we're up like 800% in the total crypto market cap. Now that's everything combined, right? That's quite a big increase. So if you subscribe to diminishing returns, we went from a market cap of 300 billion basically at the end of 2020 to almost 3 trillion now, right? That's nearly a 10x increase, right? 300 billion over here in September, October of 2020 to 3 billion. This may be the kind of the top for now, and you can see here I have these parabolic breakout trend lines. You can see it starting to roll here just a little bit too on the total crypto market cap. So I'm probably more in the camp of, if we do get this Wyckoff distribution event, wherever it's at, what happened. What happened last time. Let's go look at the chart here, just for context. You see this sell-off over here. This was the end. This was the end of the distribution transition into accumulation. So as a quick reference point of how altcoins did, what I'm going to do is I'm just going to put on here, I'm going to compare ETHBTC. So the ratio of ETH to Bitcoin, and we're going to see how that lines up. I have to pin this. Hold on one second. To new on left scale. Okay. All right. Yeah, so right here, so to your point, okay, so this is where Ethereum had a monster breakout versus Bitcoin. And then, I guess Ethereum just went sideways, didn't it? So, so this is good insight. So when we get the second phase of this rollover, right here, we might, I guess actually, as we're getting this, if we get coins coming on exchange and we get this is the point to be in altcoin trades, starting somewhere right over here, yeah? So if ETHBTC were to break to the upside right now, ETHBTC, so maybe I'm wrong about that. But remember, in this sell-off, though, everything lost like really bad. It was like right here was the sweet spot. This was Altseason 1, right there, as Bitcoin formed this higher low. Let's go look at ETHBTC. And that's where ETHBTC first peaked. Where am I at? Look at my bearings here. Yeah, this was Altseason 1. And maybe ETH isn't a good indicator because it so closely tracks Bitcoin. Let's go look at another asset. Maybe DOT. I said before, I think DOT is kind of a better proxy for this cycle than Ethereum is. So DOTBTC peaked right there, and then it sold off. DOT sold off pretty hard. So let me go back to BTC, and we're going to use DOT. Then let's just use a USD this time as a general proxy to help us kind of dial in this trade here, potential trade. All right, perfect. So this is the overall percentage gain. We can leave them both on the same scale over here. Okay, so what we see kind of clearly, let me zoom in a little bit, get back to where we're kind of more or less where we're at. So DOT, for example, so you see here, yeah, all right, kind of the pattern. We had a high over here, DOT put in a high, DOT lagged. DOT outperformed vastly over here. Bitcoin put in a high, but over here, when Bitcoin started to roll, DOT put in a new all-time high. It was kind of a weak all-time high. Another one we can maybe look at is like ADA. ADA was a really good one, but ADA's had a lot more hype around at that time. So ADA was a really good. This is my kind of parachute trade last time. I think I might. I'm gonna share that I will go to eGold right now if we get a rollover. Litecoin, eGold would probably be my plays. Maybe Cardano too. This is Cardano versus BTC. Let's zoom into this whole price action as an example of what an alt can do. So as Bitcoin was selling off, Cardano went bananas through here, and then it just held it. Cardano was super strong that whole time. Can anybody in chat? Let me look at let's see if we can get a good proxy for altcoins, other than these, like Doge maybe even. Is Doge a better one? Let's look at LTC USD. Obviously, I've highlighted this one before. LTC, Litecoin. Another red flag, by the way, that we might be rolling over is Litecoin strength. So remember, Litecoin got really strong as we put in this third high. and it got really, really strong when we started making this lower high. So Litecoin is definitely one of my big plays if we start to roll here. Litecoin should pop pretty soon here. Let's go take a look at where it's at right now. So I think that's a good proxy to keep in mind is Litecoin and what Litecoin is doing. And remember, anytime Litecoin makes a big move like this, it's a bad sign for Bitcoin. Like, if you just think about it, you see Litecoin was pretty much just mirroring Bitcoin, and it was lagging over here, which is a good indicator for Bitcoin. If Litecoin's lagging, that's good for Bitcoin. Bitcoin is relatively strong. But when Litecoin starts to outperform Bitcoin, that's a good indicator that something bad is about to happen, right? So let's go over to our current price action right now and see how that part looks, right? And I've been highlighting Litecoin for a while. So you see this current peak on Litecoin looks to me a lot like that right there. Its relative outperformance, Bitcoin made a small all-time high and Litecoin made a huge move. Relative move. Let's take this off. Let's go to Litecoin BTC. Let's see if that kind of gives us some more insight. Yeah, this is good. This is the ratio of Litecoin to Bitcoin, Litecoin versus Bitcoin, right? So you can see just that general relationship here. I'm going to keep it right here. All right, perfect. All right, so this kind of first bit of move here, you had some relative strength, Litecoin versus Bitcoin, same thing here. And then Litecoin lagged while Bitcoin was strong. But then Litecoin made a big move right here, which was the last big move on Bitcoin before it started to roll over. So we had a pretty big move on Litecoin. Maybe a little bit more upside here is to come. I don't really know. All right, I'm not going to try to guess that at this point in time. Just looking for... I've been really wary of this price action because of what Litecoin is doing. And if Litecoin were to break up here to the upside, it's a really big red flag. But in theory, Litecoin might break to the upside, consolidate while Bitcoin consolidates, and then as Bitcoin starts to roll over, Litecoin makes its last big pop, and then it rolls over harder than Bitcoin, right? That's what we saw. That's the whole pattern we saw playing out early this year. This is pretty close to what we saw playing out in 2017 and 2018. So we can kind of, expect this trend to continue. But when you see, and remember, Litecoin's in a long-term downtrend. So this is all relative strength. So don't look at it totally on horizontal. Look at it at this angle. This is what Litecoin's doing. So when you see more maybe like this, right? Something. Let me try to visualize for you guys what I'm talking about. Get this out of my way. It's more like this, right? So when you see, looks like a channel Litecoin is in. Actually, let me just go look at the Litecoin Bitcoin chart. I'm going to show you this. There's a channel, that downtrend channel that Litecoin is in, longer term. When you see Litecoin break to the upside of the bottom part of this channel, this is healthy Bitcoin. This is unhealthy Bitcoin, right? So you start to see the signs. So this is the signs, maybe this, of if we break to the upside here on Litecoin and get to the top of this channel. Now it may not make the same high because it's in a downtrend, but if we get to the top of that channel on Litecoin, that's really probably another red flag. Not necessarily the end all be all, but it's another red flag for Bitcoin. So we'll just kind of see. Okay, so I hope that helped. That was a long-winded answer to that question, but I think it's a really important topic because, right, if we are going to roll over here on Bitcoin and hit at the end of this distribution into an accumulation, let's get everything we can out of the market. And the best way to get what we can out of the market is playing these altcoins. I think, again, we had some really good trades here on Litecoin. Let's really start to do some work on Litecoin now. Let's keep a really close eye on its price action. I'll tell you guys what I was waiting on. So if you're following my trades on Twitter or Discord, obviously we had a really big position on this breakout here. So I built a really large trade position in here, really, as on these dips. And then on this breakout, I sold some blindly at 232. That was a mistake. I sold a third at 232 just because I wanted to take some off right there. It was a large leverage trade, and it blasted through that. And then we drew our typical parabolic trend line, and I took some more off at 281, 294. I had 10% sells at all these stages for myself. All the way up to the 388, I would be 100% out if it made a straight move to 388, right? But we didn't. But we lost when we lost this level over here. Somewhere over here, I put a stop loss under 250, 260 somewhere. I think 250 something. So I got stopped out over here. So now I am stopped out of my Litecoin trade. Currently, waiting for the setup for us to get the setup. We did have a little bit of consolidation here. This is a daily Heath support level at 262 that may not be the worst idea to try to buy into. I might, not financial advice, but I might take a stab at. Now these are what I call free trades, right? This is where I take a stab at buying with a really tight stop loss. Either it bounce or die, right? So it's just like I call these like paper cuts, right? I take a lot of paper cuts trying to catch these moves, right? So I buy into support on an up. This is an uptrend. I'm going to take a stab at buying into support. Either we break out or I get stopped out, right? My ultimate level, I wanted to buy back that 232 weekly level from over here. This is the weekly high. The swing high was also a weekly close. It's a really good level to watch. That was the level I've been watching for to buy back in to Litecoin after this impulse up, right? So should we break down here 262? Should we lose 262 and not get a good bounce? So what I'm looking for initially is maybe just a scalp to 280, but try to keep it riding it, take a little profit here, move stop loss to break even or whatever, and then I try to ride that out. But if we don't get an immediate bounce and take off here, then we'll look at maybe this little bit of a swing low here for a double bottom, and then ultimately 232 potentially. But I'll start doing some work on Litecoin. I'll share it, and I'll probably share a larger number of charts in Discord, and then I will put the aggregation of the good stuff that I've come up with out on Twitter. So, all right. What would you do with spot Bitcoin, hold or sell things? So when you say spot Bitcoin, I have two different buckets of spot Bitcoin. I've got cold storage and or long-term holding Bitcoin, and I've got tradable Bitcoin. What I use, I have an account that I have access to leverage, right? That account, because I'm using leverage and I'm trading in and out, like that is all income tax for me. Like I'm never going to get capital gains out of it because I'm using that account way too frequently, trading in and out of things, right? I'm trading Bitcoin for altcoins and back into Bitcoin, stacking sats. So for me, it matters not to me if I sell that Bitcoin and buy back lower. It's just more, income, non-capital gains income for me. So when I lose these key levels, if I'm pretty sure we're going to come back down, I will then sell my spot Bitcoin. Sometimes I'll park it. I'll trade in and out of some alts, and then I'll park it to collect stable coins if there's nothing really interesting going on, right? So that's technically kind of spot, but it's my very active tradable spot on my leverage account. Otherwise, I will probably trim a basket of alts, expecting a bigger sell-off. I'll trade into alts and then liquidate some alts that I don't want to hold on to through any sort of downturn. And that'll be the extent of my, I've got Bitcoin in other places that are not on active exchanges that I'm using for active trading, and that Bitcoin I'm not going to touch it. There's no point in me touching it until it's like obvious that we're in like a really bad blow off top that I can buy back a lot more later. But I'll get hit with capital gains on. I've held all those Bitcoin a lot longer than a year. So basically, any Bitcoin that I'm not trying to get to capital gains on because I'm actively trading in and out of it, stacking sats, I'll sell that Bitcoin. It's just the Bitcoin that I'm holding on to that's capital gains. I'm only going to sell that capital gains Bitcoin when I'm really certain we're way overheated and we're headed for a really big downturn, and I can buy back 3 or 4 times the number of Bitcoin after taxes that I just sold. Does that answer that question? I hope that answers that question. So, and we're nowhere near that. There's like no way at these price levels I'm parting with my long-term Bitcoin. I know 63,000 is not nothing to shrug at, but in the grand scheme of things, it's I'm going to make plenty of money on my tradable position, so I'm not sweating it. First of all, and second of all, I do think Bitcoin's probably going to trend a whole lot higher than this over the next few years. So if I have to wait it out with those long-term positions for a super cycle, and we push it off for 5 or 10 years, that's fine. I don't really care. So that's my answer to that. I hope that answers your question. What are your thoughts on IPC as a project potential trade? I hear a lot about it lately, and I feel like it's bottoming. When I researched the technicals of it, I just wasn't too impressed. But I mean, it's okay. Coinbase IPO 2 bought a lot of attention. Then, van life. Hi everybody. Oh, live stream, sweet. Pi cycle bottom indicator or marginally lower. Okay, yeah, Michael has been telling me about the Pi cycle bottom. He's got Pi cycle indicators. He's looking for a Pi cycle bottom on Bitcoin dominance. I don't want to pull it up right now, but that's something you guys can look for. I need to do some work on that. I will go work on that too. Thanks, Michael, for sharing that. Matic looks similar to ETHBTC first season. Matic, thank you. Matic is a fantastic one because it's basically an accelerant on Ethereum, right? So it's Ethereum's predominant layer 2, and Matic is more or less a leverage play on Ethereum, so it's a really good one. I do have a hodl bag on Matic. It's my biggest win of 2021 by percentage gain, not by capital, but by percentage gain it was. So I do like it, and it's a great insight. Is that this is a really good one to watch for. So I need to wrap this session up because I got some other stuff I got to do. But it's a good one to look forward to keep an eye on. Check total 2 against BTC. Okay, let me just look at this. Yeah, okay, total 2. This is all. Yeah, thank you. That's what I was looking for. I have total 2 here in my chart. This is a really good indicator. I'm just going to do it the other way around. I'm going to overlay BTC USD on the total 2. Do it backwards for fun. All right, I'm going to say, let's pin this to new scale on left. All right, so this is, there you go. Very, very good. So this is the total 2. So this is excluding Bitcoin. So this is the total crypto market cap excluding Bitcoin. So yeah, you see here, clearly Bitcoin was strong, alts were lagging. And then as Bitcoin rolled over, alts got very strong. And then ultimately from this peak to this bottom, they slightly overshot Bitcoin. But honestly, not as bad as I thought. It was really, I had it in my head that these alts were losing like 80%, but I guess Bitcoin lost like 70%, didn't it? So yeah, it really wasn't that bad. It's really tracking pretty close other than this here's a clear delta between the strength of Bitcoin and the strength altcoins are lagging. And now, that's why I say we're off script because that interplay, that relationship between Bitcoin getting really strong and then those funds rotating into altcoins, it's dissolved. You look over here, it's just following. It's like everything's moving together. Maybe altcoins outperform just a teeny tiny bit over here. Maybe they slightly more to the downside over here, but not much. I mean, if we line this up from this very left over here from the lows, that is like really, really close. Yeah, from that sell-off over here, and it's just they're all following each other almost directly. Yeah, so there's not really any insight to glean there, unfortunately. I don't think. All right. ADA made me a lot of purchasing power. Cardano feels distributed to the public now. Check total 2. Wait. Look at the fall pump for Litecoin. It would have false flagged. All right, guys, I think I'm going to ask. Michael says the risk is not owning freedom money. Yeah, exactly. That's why I'll always have my hodl bag unless it's like super duper clear. Ultimately, what we're all striving for is to increase our buying power. So if Bitcoin is the life raft to get us through the inflation, right? That's just the way I look at it. The Bitcoin's my life raft to get us through inflation. These inflationary times, and maybe even the transition to a different currency. I don't know, however that plays out. I'm not going to try to get into conspiracy here, but that's just. So I don't want to sell my Bitcoin unless it is clear that Bitcoin has way overshot its relative buying power to fiats for a short period of time. The fiats, while they do inflate over time, it takes time, right? Bitcoin can change drastically in a short period of time. Fiats typically do change value in a relatively short period of time. So if Bitcoin were to vastly outperform fiats, and it's very clear that Bitcoin is there's a disconnect. That's when I would sell Bitcoin for the purpose of preserving my ultimate buying power that I had at that moment with Bitcoin, preserving that buying power for a short period of time in fiat, looking to then rotate right back into Bitcoin when on the other side we had a capitulation when Bitcoin was far too inexpensive. It was way below market value, and then you rotate back. That's how I look at it. All right. I can post the chart on Twitter for BTCDs. Go find Michael. Okay, Michael, let's go find your Twitter feed real fast. Thank you. Free digital. Yeah, post it, Michael, if you haven't already. I don't know where it's at. BTCD. Is the stream freezing? Sorry, guys. It may just mean that Bitcoin hasn't taken off yet. That's also true. Use total 3 versus BTC. It's also excluding Ethereum, right? Total 3. I've got this one here, total minus total 3. I forget why I did that one. I think it was a Ken Stanfield thing. Ken was talking about that chart, I think, for some reason. There you go. Let's see if that tracks really close, and then we're going to wrap up. Yeah, it's a little bit better. Bitcoin is underperforming. Bitcoin and Ethereum kind of combined. I guess, yeah. Well, anyway, this is Bitcoin. Bitcoin is underperforming the combined crypto minus Bitcoin and Ethereum here by a little bit. So, but it's pretty close. Yeah, I mean, this is kind of shades of over here, right? So if you look at this kind of, you had Bitcoin being strong and the altcoins like right here, moving Bitcoin, altcoins really strong, a little bit of wiggle in Bitcoin. Bitcoin starts to roll over, a stronger move. I see shades of this exact same pattern playing out right here, right? We have this relative strength in altcoins, maybe even over here, like this. 1, 2, downside. 1. Maybe we're in the 2 right now with probably some more upside before it rolls. I would imagine there's a little more upside here on the altcoins. So that's good. That's good. That's really good insight right there. Is maybe we're looking at total 3 versus Bitcoin. I could probably go put that. Be easier to look at on the Bitcoin chart. Actually, we go do that before we wrap up. I'm going to go back to my Bitcoin chart. We're going to throw on total 3 on here. Let me go find a clean Bitcoin chart. Oh, I've got a bajillion Bitcoin charts. All right. Let's see here. Total 3. Perfect. Okay. So now we kind of see the pattern here of as Bitcoin starts, basically long story short, you can see it. As Bitcoin starts its rolling top, altcoins outperform Bitcoin, and then they also outperform from here to here. That's probably a bigger move than here to here, I'm guessing. Same general pattern going on here, right? So we had this, I guess really though, the only problem with that pattern is we had this strength of altcoins right here, which more corresponds with September. And, it's kind of, maybe we're more like right here. Maybe there's a whole lot more room to go on altcoins. I kind of would think, I would kind of lean toward there might be a lot of room to go on the altcoin explosion. But, yeah, I mean, you can see the pattern unfolding, though, the general pattern of as Bitcoin rolls, if Bitcoin's going to do a rolling pattern, you got altcoins just going really strong versus Bitcoin. And I would, like I said, I would imagine there's actually a lot more upside here for altcoins, just looking at this in general. So I think some rotation of some altcoins is definitely warranted. If things start to develop that direction, definitely a good play to try to maximize profits for this phase that we could be in. But we'll see. All right, guys, I'm going to wrap up. BTCD posted. Okay. Where's Michael at? Michael. There we go. Refresh. Okay. Well, we see the next BTCD move trigger on the pi cycle bottom for BTCD. Yeah. So we're headed for a pi cycle bottom. So, well, you get the pi cycle bottom indicator twice over here in 2017 and 2018. Okay. We haven't had a single one yet. But the first pi cycle bottom was like a very pathetic move compared to the second one. Yeah, I don't know how. Maybe I need to digest this, or you need to could also be marginally lower low. Yeah, I think you and I need to have definitely another sync up video, and just go over all this new data that we have now since we talked last. And maybe have you explain how you are analyzing this, because the way I'm seeing it right now is it's not giving me a lot of good insight, because I'm seeing these crosses and it's just not too exciting of a move after the cross. So that's the downside right there. Okay, yeah, and the downside right there. But yeah, it kind of popped on that downside, and then it kind of just bottomed out on that downside. I don't know. I need you to explain it to me because I'm not certain what that means, but anyway. The first time triggered the blow off top for Bitcoin. Oh, okay. So we got to. Well, I mean, that's what I was looking at your chart here, though. It looks like it's pretty far away, too, right? It looks like we got a long way to go before we hit a pi cycle bottom on Bitcoin dominance. Just because that it's pretty wide still right here. So, all right, guys. Yeah, let's. Michael and I need to do an update video and get that out to you guys. Otherwise, this is sorry for not getting out a update last week. So this will be your update for last week. It's kind of more of a real time look at the markets today. But I hope you guys found this video beneficial. Everybody take care. If you want to hop in our free Discord server, go check my pinned tweet. Otherwise, take care, everybody. I gotta go find some music. I'm playing some 80s retro music. Hopefully that won't play the whole time because YouTube will yell at me.